Hi, welcome to Sugar Mommy Investing. I am your host, Sugar, aka Marissa, and here at Sugar Mama Investing, I am here to tell you and teach you everything I know about option investing. So, with this first video, what we're going to talk about is the first thing that I think if you're starting to be curious about options investing, the first question that comes up for me that I would like to try to answer today is, what is an option? So let's talk about what an option is. An option is just a contract. It's a contract that controls 100 shares of stock. And so when you ask people what an option is, there's a lot of confusion and sometimes difficult explanations. All you need to remember is an option is a contract that controls 100 shares of stock. And sometimes you'll actually hear it called an options contract. So what options traders are doing, they are buying and selling contracts based on price changes in a company's stock. And they either make money or lose money depending on the price of the contract. So that's it. If someone asks you what an option is just a contract. Okay, now, as with all contracts, whether it's a real estate contract or a legal contract, there are some provisions in the contract that specify what the contract is about. And an options contract is no different. An options contract has 4 things that it specifies in the contract. So I'll write them down. But the first thing and the most important thing that the option or the option contract specifies is, number 1 is for which stock, okay? Now, I say stock here, but I really mean company. What is the underlying company that you were talking about? Are you talking about Apple? Are you talking about Google? What company are you looking to trade the options contract of 100 shares and control 100 shares of? So that's very important. What company is the first thing that the option contract has? Number 2, the second thing, the option contract talks about whether you want to buy the 100 shares of stock or if you want to sell. I guess that should be an S. If you want to buy the 100 shares of stock or if you want to sell the 100 shares of the company stock. Now, this is a little bit confusing if you have never traded stocks before, if you've never done day trading, if you've only bought stocks or shares of stock, then you understand what buying is. But you can sell shares of stock before you purchase it, okay? And it's confusing. We'll talk about what selling looks like with options, but just know that you can buy shares of stock or buy options contracts, or you can sell options contracts and sell shares of a stock without owning them, okay? And we'll talk about that in another video. So, number 3, the options contract determines the price, okay, that you want to buy or sell these shares of a certain company, okay? This is the interesting thing about options. You can name what price you would like to conduct business at, okay? So let's say Apple is selling for $125 a share. With the options contract, you can say, I would like to buy 100 Apple shares at $115. Okay, now there is a cost to purchase this options contract, but the third thing that the options contract has in it is what price you want to do whatever business at, okay? Are you following me so far? So let's go back over the 3 things that the option contract has. Number 1, we're talking about what company. Number 2, the option contract talks about, do you want to buy or do you want to sell? Number 3, the option contract says the price at which you would like to buy or sell 100 shares of the underlying company. Okay, you with me so far? Finally, the 4th and final thing that an option contract has is a date. Okay, every other contract specifies what date all of these things need to be accomplished by. Now, you can choose dates. Options tend to expire on Fridays. And for the most part, they expire on the 3rd Friday of every month. But there are some companies who are so popular, whose options, they do so many volumes, trade so many volumes of options that they have what are called weekly options. But for the most part, options expire on a Friday. But what you need to know is you get to choose the date. You can say, okay, so by January 1st, and I don't even know if that's a Friday or not, but just for our example purposes, the 4th and final thing that the option contract explains is the date by which you would like to have the price to either buy or sell the option contract for this underlying company. Okay, does that make sense? There are a couple of takeaways that I want you to take from this, and I will try to explain it as simply as I can. Number 1, an option is just a contract. And when you are buying or selling an option, you are buying or selling the cost of that contract. And the contract specifically states 4 things. What is the underlying stock? Which company are we talking about? Doing business or, doing a transaction with 100 shares? Are you looking to buy? Are you looking to sell? What price would you like to buy or sell those 100 shares of stock? And by what date would you like to buy or sell at $115 the 100 shares of stock? Hopefully I haven't confused you too much. If you have any questions, you can put them down below. If you're interested in getting started in options trading and following every single move that I make in my accounts, you can go to my Patreon page, which is patreon.com/sugarmamainvesting. So keep watching. I will do more videos and explain and teach you everything I know about options trading. Bye.